fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Digging deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today Normally we have an exhilarating lineup of segments for you all, but we have an exhilarating market in front of us today, so that's probably what we're going to be talking about for a majority of the day. We are already off to a very hot start in September. The market is moving down about 7 points now in the pre-market session, down about 1%, as you can see on my chart here. Not a great move over the Labor Day weekend. And if you were in our community over Exclusive Trading, I warned on Friday that it was looking like, and these are the daily candles here, so we'll eliminate some of my drawings here. I warned on Friday it looked like we were seeing some people going risk off into the end of the month based off how price action was looking, and volume was higher than anticipated. I even said on this program, leading into a holiday weekend, you tend to see, especially on that Friday, the day before the holiday weekend, you tend to see lower volume. In this case, we actually saw a move down on higher volume than the last preceding 4 days, which is a little bit of an anomaly. So take that into account, and today's price action thus far in the pre-market, very interesting. The market's crashing, everything's going to hell, and what should you watch out for? Well, we'll talk about it on this program today. I promise you it's not that scary, and if you've been paying attention, it's kind of what I've been looking for, and I got thrown through a loop there a minute with NVIDIA earnings, thinking that if they broke that 183.30 level, which they tried, that we would see a preceded leg up on the market. However, NVIDIA did not break that 183 level. That 183.30 level failed it after testing it in earnings and on the next day, and proceeded to push lower. Now we're currently sitting around the 50 MA on NVIDIA. That 50 MA is 170.52 on the daily, currently in pre-market trading 169.77. So we're at that kind of support range. On top of that, SPY is also in an interesting spot in terms of where support resistance levels are. You've got this cluster of support down here, 136.15, 137.58, and 138.04. This general area is a good cluster of support here, so we're going to be watching this, especially right into the open. Now, on top of that, we also see volatility spiking on the market, which makes sense. Again, volatility and the market don't have that one-to-one relationship. They don't always move up at the same time, but they tend to move together, right? Volatility goes up, the market tends to go down, because volatility, and the VIX as a whole, is a measure of testing price agreement or disagreement. As the VIX expands, that means there's a further disagreement on price with SPX contracts. I talk about this a lot in this program because not a lot of people understand how VIX is calculated, and they just use it as a volatility measure, not really understanding why and what it means. So it makes a lot of logical sense that as price moves either which way very aggressively, you could see those spreads widen on SPX, consequently causing a spike in VIX activity, or UVXY, any kind of volatility proxy that gets its value from the VIX. So we'll be keeping an eye on that today. Quick look around our Mag 7 names, and then we're going to go into our Catalyst Watch for the day. NVIDIA leading the pack to the downside, down 2.5%. That's after we closed on Friday, down 3%. So we're seeing a strong sell-off off the back of those earnings. Although, again, really solid earnings with that one questionable thing in there about China, as I made a video on, that you go check out on my channel. doesn't mean that people aren't going to take profit, especially into a seasonal time of weakness. So I'm not someone who harps very strongly on seasonality. I think it's a little overstated, and I'll tell you why. Every single year, depending on the financial condition of the market, depending on where rates are, where the treasury bills are, where everything is, right? The price of gold, everything, right? Everything changes every single year. I think it's hard to use seasonality as I think some people, I want to say, use it more as a crutch, where they have to say, September's always weak, right? October's always weak, and then you kind of get surprised. So I don't like harping on seasonality because I think it does lead you into a trap of expectations. You expect things to be good or you expect things to be bad at certain times of the year. But in this case, it seems like for right now, we are following the trend that September tends to have. I'm picking my words very carefully for you guys, that we see a more bearish kind of reaction on the market. Now, like I just said, NVIDIA leading the pack to the downside, 2.5% down, pretty harsh. We also have Meta rejecting out of that 775, 777 area that I've been talking about on this program ad nauseum, now currently at 176 in the pre-market. Watch Microsoft today under that 500, obviously a big psychological level, huge level on the daily. We remember when I talked about all those sandwiches that were forming in the market? Meta is on a sandwich, right? When those short-term EMAs and long-term EMAs start to squeeze, Microsoft's right around there too. That POC is right to that downside right there. So 503.13, which we're under right now. So that's what I'm saying. Extend that gratitude to 500, a big psychological level. Breaking that, you could see a push down on Microsoft sooner than later. As I've been saying and will continue to say, Google is your tech leader for right now. So if you're a Mag 7 investor, you want to keep your eyes on Google because Google is going to be the one that's going to be leading the pack in terms of the Mag 7, I want to say, sentiment, right? Now, with that being said, they are hotter to the upside in general. The weekly's super, super hot. They've been grinding up. Some level of retracement here would make a lot of sense. So that could lend some credence to a pullback in the market in general, which I've theorized and spoken about on this program ad nauseum as well. Going over to Apple here, could see some strength. It may come back and backtest this 227 area, but so far Apple, in comparison or in conjunction with Google, are the names you want to keep an eye on for your Mag 7 strength. This is probably one of the better Mag 7 names in comparison to all the other ones, where Apple was in a base for quite a long time here. Broke out of the base, broke above the 200 MA, now kind of consolidating along with market weakness. So if there is some bullishness, you're probably going to see it out of Apple as well versus your other Mag 7 names. As you guys know, as I've said again ad nauseum, Tesla is bearish under 360. We're moving down here in the pre-market lower than Friday's candle, which is not a great candle here. And I mentioned to you guys, if we crack below this, basically where we are, this 330 area, and get a daily close under that, that opens up the door to get all the way down here. I will tell you right now in this program, I will be opening up a short position on Tesla this week if we sustain under 330. That is something I'm watching very, very closely. It will be more of a longer term position, more than likely a spread position. But I see this coming down sub 300 and worst case scenario getting down to this 220 area, which I do see as the point in time where I am interested actually in going long on Tesla. So keep that in the back of your mind if you want to. Amazon's not awful, but getting sub 220 is not going to look too good for Amazon either. Let's look at our Catalyst Watch. We've got 4 minutes till the market opens, so I want to get that through here to you guys. That way you guys are prepared, or as prepared as you can be today. So we'll pull that up here momentarily. Now, this did just come across my little docket here that Trump is scheduled to make an announcement at 2 p.m. Don't know what that is. Don't know what it will be. Just probably pay attention. You never know. So keep an eye on that. In terms of catalyst or potential catalyst today, you do have PMI. You have the S&P PMI at 945 and manufacturing PMI at 10. But past that, outside of the Trump announcement thing, pretty clean day. So in terms of catalysts, not much going on with the exception of PMI and that Trump announcement. So your window of opportunity to trade, as you guys know, on a Monday, especially a Monday after holiday, on a shortened week especially, I want to kind of let the chips fall here, see what happens, especially on this kind of move down. You're going to see high IV. It's going to be very risky to buy to open contracts, so new buying, new purchasing contracts, anything like that. would be a little bit riskier than it normally is. So unless you know what you're doing, you know how to read the Greeks, you know how to understand implied volatility, you may want to wait for this open, give it 15, 20 minutes, especially with that PMI data coming through. I think the window of opportunity, if you're looking to day trade today, more than likely is going to be between 10 and 2. That gives you a period in time in which, theoretically, a trend has formed one way or the other. You're still before that Trump news, and I know some people don't like trading the middle of the day, but due to how this kind of move is, due to it being a new month, you're letting some of that IV cool off from the open. Like I said, you're letting a trend develop, and you're at a period in where there should be some level of quietness in terms of anything that could bully you either way in the market. So I think your window of opportunity today is more than likely going to be around that 10 to 2 o'clock time if you are a day trader. Otherwise, you might just want to sit on hands and kind of let this go through. This could be the start, hopefully, for what I want, of us getting that correction down to that 610 area. I'll remind you, I am personally and have been personally looking for the correction to around 610.78 in worst case scenario, like worst case scenario, like 570-ish. But realistically, between 610 and 580 is going to be where I'm looking for a correction on the overall market before legging up into the end of the year for a Santa rally into December. So again, that's medium-term time frame, right? I know it seems scary, and I'm not trying to preach bearishness, but if you've been watching the program, I've been saying this now, I don't know, for 2 weeks, that this is kind of what I'm theorizing, and I've been very cautious to be a bull in general because it seemed like we were running out of gas in the tank here. I would also remind you that bears like to take elevators and bulls take escalators. What does that mean? Bear moves tend to be sharp, quick, aggressive. Stop losses get taken out. You see 1 to 2 to 3% losses on the SPY in a day. Volatility goes up really quickly, and bull moves tend to be more like an escalator. They go up 0.5%, 1/4%, 0.5%, 1/4%, slowly climbing to the upside. So when we see that fear come into the market, that bearishness, I want the quicker, the sharper the drop, the better and the higher chance of getting like a V bottom reversal to the upside, which would be my preferred method. But hey, if we don't get it, it is what it is. Guys, we have 30 seconds until the market opens, so do me a favor. I ask you twice per stream. I'm going to ask you once now. I'll ask you once again a little bit later. Do me a favor, wherever you're watching, whether you're on X, YouTube, Instagram, Kick, or Twitch, anywhere else, do me a favor and interact with the stream. Drop a comment. Hit like, retweet, share, etc. Do whatever you can. I appreciate all your eyeballs watching me on this beautiful Tuesday morning, and I'm here to help try to keep you as safe as I can from a potentially volatile market. So if you enjoy the show and you want to support the show, just interact some way. That's all I ask when I ask you for money, shekels, high fives. Just interact with the show. Give me some algorithmic love, and I appreciate your support for the program. If you haven't already, pop on over to YouTube. Once we hit 500 subscribers, this will be a daily show. So if you enjoy the content, do me a favor and subscribe over on YouTube if you haven't already. All right, market is now open. We are opening under that 637.58 LOI. Microsoft has broken 500 into the open, so we said we wanted to keep an eye on that as well. So we're getting a little bit of a stark sell-off here. Looking at our UVXY just on the side here, up 9% on UVXY from Friday's close. We'll keep an eye on VVIX and VIX as well. VIX up near 18, high of 1927 thus far. VVIX doesn't look like it's updated yet, so we'll roll back to that in a minute here. Watch this pre-market low here, 636.44, more than likely going to crack it. You're going to want to see bulls step in if you're bullish at 636.15. If this breaks, we will draw lower. We will draw another $2 lower. I know it seems a little overstated, but I don't underestimate a bear move, especially in this environment. We need a retracement. We need some level of a pullback. With that being said, I wouldn't chase either. Be calm, like I said, before the market even opened. Give this the first 15 minutes, 20 minutes, because I'm going to guess without even looking. We'll look in a second here. I'm going to guess without even looking. IV percentile is very high, and if you don't know what you're doing, especially if you're trading options, you can make a big boo-boo. And even if you pick the right direction, right, you buy puts and it goes down, you may overpay for them, and if it doesn't go down at the rate of speed that you anticipate, you could lose money. So please, 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 especially if you're a newer trader, allow this move to go. I know it may seem exciting and whatever, but allow things to calm down. Allow the market just to do its thing. You'll be better off. The main goal of the game here, if you're trading, you want to be here long term. I want to see you guys coming to my program 2 weeks, 3 weeks, 5 months, 10 months, another year from now, right? I don't want to see people blowing their account and then you're just giving up on trading because you made one mistake on one day. The market will always be here tomorrow, and you want to keep an eye on those longer term potentials that will approach you in due time. And that's why I've been talking about that 610 area. that I want to open up longs for the end of the year. I'm more interested in being a bull long term. I don't care where we go short term. I will make my money day trading, but I will let the market do its thing, and then I will wait and buy my time until we get to where I want to go, and then I will go long, and I will make a very big bag, and you can all gloat about it that you saw it first on this program, and I've called it out about a month ago. So that's what I'm waiting for. That's what we're going to do. And that's what I'm doing. And I hopefully you consider a similar mindset, because longer term, I bet you and I guarantee you that will yield you more fruit than constantly trying to day trade and be aggressive every single day. Just try it. Just try it for me, okay? I promise you'll feel better about it, and you'll feel less stressed, more importantly. Good morning, Negum and Hatchet. Thanks for saying what's up in the chat. Hope you guys are doing well. I want to flip around to our sectors here momentarily, but I want to focus on our Mag 7 names because that's obviously where we're seeing a lot of this volatility. Now, NVIDIA's down here, as I stated, right on the 50 MA. We also just broke the daily green SAR. So if we get a close under this level, basically if we close under today's low on NVIDIA so far, 168.65, we are going to see a potential bear trend start to form on NVIDIA, which is not good, obviously, if you're a bull in the overall market, because NVIDIA swings the SPY alone, what is it, 8-10%, just in its individual price action. So if this closes under today's low thus far, because that will give you that SAR break close, 168.65, you will see a potential bear trend form on NVIDIA. Now, that may take a few days to formulate, especially with these short-term EMAs coming down to pinch on the longer-term EMAs like we talk about here. That will confirm a bear trend to the downside. It wouldn't shock me to get back to this old all-time high where I originally drew this Fibonacci retracement at 153.13 and potentially back to 149.77. So near term, if you're a long investor in NVIDIA, if we do get that close under 168.65, you may want to consider repositioning. You could realize your profits and then reposition at a lower price down here, assuming we see some bearishness continue into the month of September. Meta is now starting to confirm a downtrend. So we are confirming that downtrend. If you want to be patient, you want to wait for this trigger, which you could use the POC as your trigger. It's 711.65. But in the next few days here, if this continues, if the bulls don't bounce it up here, literally in 2-3 days, you will form a bear trend here. Look, even on the weekly here, your MACD is starting to curl over here. You still have bull momentum, 57 on the RSI, but you're sitting on the weekly green SAR as well. You broke you have a red green SAR on the daily. Your MACDs or your EMAs are crossing over your long-term EMAs. This is going to be a strong bear trend forming on Meta on the daily and on the weekly if the bulls don't bounce us up literally within 2 to 3 days. So keep an eye on that if that's something that interests you. Now, flip it back to Microsoft. We see the bulls are defending that 500 obvious psychological price target here. Cracked it right at open, quick bounce above. I don't anticipate that going with much ease. And I know it seems silly sometimes looking at some of these numbers, but psychological whole round numbers are typically where people place stop losses, where people place buy orders, right? It's just, those are psychological levels in which the market will react. And I know it seems a little silly, but there's no real stronger rhyme or reason past the fact that people like to buy whole numbers. People want to sell whole numbers. Most people are setting stop losses at 500 or 4999, right? 499.99. So that's why we see these kinds of reactions that happen around these levels. Google's pretty flat into the open here, just holding its gap down thus far. Apple actually looking more bearish than its peers at the moment, which isn't great. Tesla's trying to get over that 330, which is basically my short trigger here on the daily and on the weekly. So again, if we stay under 330, I might give it another 2 days or so, like this week, if we stay under 330, or I might even just wait for a weekly candle, because this is one where I don't really need to rush this kind of trade. It will play out if it stays under 330. Yeah, your monthly is going to go bearish, your weekly is going to go bearish, unless Elon comes out with some crazy news. If this stays under 330, you are bearish on all long-term time. Like, you will go bearish definitively on your daily, on your weekly, on your monthly. I would be a big Tesla bear for at least like I said, I'm looking at 220. I'm sorry, that's scary. I know some of you aren't going to like that because you're long Tesla, but under 330, I said I've been bearish under 360. Under 330 is my short trigger, so where I want to be a short. So if we stay under that, it's going to wipe like 20 to 30% of its value. I'm sorry, but it is. Just telling you how I see it. It will get back to this sweet spot down here around this 220-ish. Not saying I'm not going to take profit along the way. I won't hold that short all the way down, but that is what I see on Tesla as it stands right now. You want to be very, very careful on this name if you are long. Not trying to fearmonger, just telling you how I see it. Amazon bouncing off its 50-day MA on the daily right now, trying to hold to the upside. Gap down on the open, so gap further down, I should say, on the open. Now trying to get a little bit of a reversal here. The market as a whole tested that 636.15 as support, so we did break that pre-market low. Look at these nice wicks down here for the bulls. So we had 3 wicks on the 1 minute here and a nice little reversal here. Good for about a point on the SPY. So we're going to see what happens up here. Don't forget, we do have data coming through at 9:45 and at 10 o'clock. So that could obviously impact some level of directionality here on the market. Now, if you're a bull on SPY, you're going to want to see us break the open, essentially over the 637.58 LOI on the SPY. If you don't see that, especially in the next few minutes here, then you can anticipate a lower low on the day. Let's take a look at our IV on contracts here. Wow, look at these contracts, up 600%. What a beauty. Yeah, you're rocking a 25-ish IV on your at-the-money 0-day contracts. Implied volatility, IV percentile is what I meant to say. Typically sitting around 1884, so we are in the higher percentile right now, meaning it is more expensive to purchase 0-day options right now on SPY or in general across all of its chains. So you are paying a premium right now, roughly about a 30% premium on IV alone. So if you don't anticipate that IV to extend further, which it can, I'm not saying it won't, but if you don't anticipate that as part of your trading strategy today, you should be very cautious purchasing any buy to open contracts on the market, as you will overpay for those contracts if it does not go in your favor. If you get any sort of chop, you will suffer IV crush plus your theta decay on a 0-day. So you want to be very, very mindful of that if you are someone who trades 0-day contracts. Q is getting a nice bump up here in the open, and IWM trying to get some level of rally here, rejecting around the 200 MA on the 1 minute. Let's look at our sectors here and see if we can find some strength in the poo-poo pile. And everything is red. Let's flip through them individually to see if we can find some level of a shining light here in the turd salad that is the market today. XLU pushing lower, down about 1%. Energy also down 0.61% from Friday's close. Consumer staples, the only thing that's holding almost green to stable across all of our sectors. This is interesting to me. So I like listing these 3 sectors up here for you guys so you understand where our defensive names are. Typically, your defensive names are your utilities, your energy, and your staples. Now, staples, for some reason recently, and that's debatable on how you look at the macro environment, whatever, staples have been moving a little weirder in comparison to their defensive peers, in comparison to utilities and energy. And days in which we're seeing utilities and energy green, we're actually seeing staples not moving necessarily green or not necessarily moving with the pack. As you can see, these two are pretty close together. Now, obviously, it's not 1-to-1, but typically your defensive names move together, and your growth names tend to move together as well. In this case, if we're just looking at tech. But I find it very peculiar that staples is actually relatively showing strength in comparison to every single sector today and is not suffering as much downside as the rest of the market as a whole. Now, if we go out here on the daily, and this is something I looked at over the weekend, look at your 200 MA here. So this dark blue line on my chart here on staples. Now, this could actually support a thesis of using a potential consumer staple hedge for the month of September. I hate using the word hedge because hedge tends to have people use the excuse of, well, it's a hedge, it can go to 0. Oh, it's supposed to go to 0. It's a little dumb, but I like this idea where it's sitting right now if we continue the trend that we're on. Those are very key words, if we continue the trend that we're on. Now, you could argue that it could be bearish here short term, but you've also built a hell of a long base out here on staples. Now, this is a sector of the market that's going to be strongly affected by tariffs as a whole. Consequently, how tariffs, how any trade news, anything like that affects staples, inflation data, whatever, right? It's very macro sensitive. How that data comes through could obviously affect how the XLP performs. However, it has been respecting the 200 MA at least for the last 7 months or so. We did have this break here short term, but past that, and even with the little tariff scare, every time it's gone down underneath it, at least in the last year or so, like I said, it's been respecting it and coming right back up. You even have three really recent tests here where it moved back up the next day. And even most recently, 2 days ago, we tested it and bounced right back up. So what I'm looking at here, again, for a hedge on XLP, is considering consumer staple names in this environment as a little bit of a defensive chunk of my portfolio, and using XLP kind of as my guideline. Now, obviously, you could just long the XLP if you want. You're playing with peanuts at that point, though, to just be very blunt with you. Even if you got a long at like 80.22 and you risk the stop down here at 80, like, yes, you're risking 22 cents. Your upside here could go whatever. You want to go to like $82.71. You're not making a lot of money. It will move very slow. But you can kind of use this as your guiding light for your sector. So if you find a defensive name that you like that's in the consumer staples section of the market, you could use this kind of as your baseline in combination with another good name that has a good chart right now. So this is where I actually see some opportunity for September in the overall market, is with XLP and with those XLP adjacent names. Anything that's a consumer staple name that has a good chart, that has a good setup, good fundamentals right now, that may be at a discount or maybe starting to turn a little bit more bullishly. You have the support here of the overall, I want to say the index of consumer staples, that it should hold mostly bullish in comparison to the rest of the sector's peers. Now, there's an argument that can be made every single way, but if we look at what our other defensive names are looking like, if we look how energy is and look how utilities are, utilities does not look too great. Energy is pretty hot. It could be due for a pullback. Utilities look like we're pushing a little bearish here. You might float around here for a few days or so before going lower. But conversely, staples doesn't really move too much. It will chop kind of sideways. So if you find a good staple name with a good chart, you know that, especially how this 200-day has been acting as support, you can kind of use this as your guiding light, that as long as you're picking the right name in that sector, you might actually have a nice return on consumer staples in the near term, specifically in the month of September, even if we see a market drawdown. So that's something I wanted to highlight on the show today as a potential opportunity for those of you that are more swing traders or more long-term investors. This is where you probably want to hide your money if you want to be a little defensive on the market, would be in consumer staples or in those, again, adjacent names in the consumer staples sector of the market. Now, pushing over to XLK, you're sitting under the 50 MA. You've been chopping up here. It doesn't look good. It looks like tech wants to draw back. You got this nice little gap down here. I mean, you got a few gaps here in general, but it wouldn't shock me to get to this little cluster of support here, which would support my thesis. You can draw this chart side by side, which actually I tested that this weekend. Let's see if I can do it like that. Okay, it just gives me a line. But you can draw it side by side with the SPY. Okay, that doesn't do what I want it to do. Never mind. Forget I did that. Go away. Now I can't get rid of this yellow line. Go away. All right. If you pull this chart next to the SPY, because I was flipping back and forth, you've got this obvious gap here around the same time in May, and then you have this other gap here in whatever that is, June or July, where it lines up pretty nicely to get that 610 pullback. That 610 pullback's right around here on XLK, around that 240 area. And that deeper pullback, right, if we go all the way to 570s, right around here, that 220-ish area on XLK. So this is a very similar chart. Makes a lot of sense. Tech is essentially 30% of the SPY right now. So if tech gets a drawback, the market's obviously going to pull a drawback as well. Now, if that boils over to the other sectors of the market, that's where we have to at least be conscientious of it. And that's why we're looking at all of our sectors right now. Real estate's iffy. You want to keep an eye on... Okay, I have a few statements about real estate I want to highlight to you guys. Keep an eye on builders, keep an eye on materials, keep an eye on lumber. Lumber's been going down. However, in times of higher inflation or in times of economic uncertainty, housing tends to hold its value. Now, I know it seems a little odd because in a certain realm, if we're seeing lumber prices drop, theoretically home prices also drop along with that. If we see rates go down, a selling environment tends to turn to more of a buying environment for the real estate market in general. What I'm looking at here with real estate specifically is the fact that there is more economic uncertainty. Real assets tend to hold their value in periods of economic uncertainty. Look at gold, for example. So actually, even though we may be short to longer term in a higher inflation environment, even if rates cut, I actually think, and even though home sales right now are like the lowest they've been in, I don't know how many years, 10, 15, 20 years, whatever they are, I actually think homes are going to still appreciate in value and hold their value, because even though there aren't people buying houses, that doesn't necessarily depreciate the value. Now, obviously, with everything in the market, it's only worth as much as someone's going to pay. Duh. But that doesn't change the fact that these real assets still tend to hold their value. If the dollar lost all of its value, we're going to start trading chickens and gold and cows, right? If there's no dollar. Well, doesn't this physical house still hold its value in some degree? It's just a matter of what you value it at. And that's where my head's at with real estate. So it's not that it's going to go down in value necessarily. I just think the market will thin out depending on where you are, because real estate's very sensitive to certain areas. I know around me it's a seller's market. I know many other areas in the United States right now it's a buyer's market. But depending on where you are and depending on just in general, I think many homes, even if we hit a recession, ironically, will actually hold more of their value than anticipated by a lot of people in the market. And if you guys disagree, feel free to sound off in the chat. But I'm pretty confident we're going to see real estate actually surprise a lot of people and hold their value as real assets continue to hold their value in times of uncertainty, especially if there's uncertainty around the dollar, and especially as we continue to see gold push to the upside, supporting the thesis of real assets continuing to hold their evaluation, at least in my opinion. Now, again, that is market sensitive for wherever you live, but it is something I want to highlight today to give you guys more of a macro feel. Now, I'm spending a lot of time going through these sectors because, like I said, we're like scary drop over the weekend, right? I want to give you guys a breakdown of where sectors are sitting right now and kind of give you more of a succinct idea of how to analyze the market in this current position that we're in versus just watching the intraday price action for now. Because I think it's very important to have these understandings. That way you can get your head on straight for whatever your trading strategy is. So I'm just trying to provide some context so that way you can take what I'm saying and apply it to your own trading as well for whatever your strategy may or may not be. Looking at materials right now, it doesn't look awful, but it is down with the rest of the group right now, along with industrials. Industrials may push the same way, due for a little bit of pullback, nothing crazy, maybe 5%, maybe not like a full correction here on industrials in general. Now, also another very macro heavy affected name, so be mindful of that. Healthcare has been an interesting one and will continue to be an interesting one. And what's most interesting about healthcare after we had this little down push here, obviously a lot of people have been watching UNH as a whole, as one of the big XLV leaders. Obviously, Trump has been saying things about prescription drug prices and whatnot. So this one's in a period of sensitivity as well, where news can bully this one around. With that being said, you are looking at the daily chart here, pinching down. Again, another sandwich, as I like to call them, with a 200 MA in your short-term EMAs. I would be very wary on healthcare names in the interim, in the near term, because this one's really one that could go either way, in my opinion. I see a bull case and I see a bear case for healthcare stocks as a whole. Again, generalized whole. There are some names that I think are very good buys right now. There are other names that I think are very overvalued. It really depends on what you're looking at, what your strategy is, if you're buying a fundamentals, technicals, etc. There are some gems in the rough here with XLV. There are some overpriced names as well. So depending on which way this pushes and which way you're positioned, you could have a very happy day in the near term or a very bad one. So if you are exposed to healthcare, you do want to at least take that under consideration as we head into what could be a month of weakness where we see the overall market correct roughly 10%, at least that what I'm personally forecasting, because XLV is in this area in which it could go either which way. So that's something you want to be mindful of as an investor. Now, financials is a little iffy to me. I was actually pretty bullish on financials for the last week or two, and we've been pushing up. Today, not a great look. This one's going to be interesting to see how financials reacts, especially as the Fed doesn't cut, etc. Whatever drama happens with the Fed this month, seeing how banks react as a whole will be something of interest, at least to me, and seeing how the sector reacts as a whole. Now, I am in general bullish on the financial sector still at this point. I've announced I was roughly bullish around 52, so we're still okay here. I will be able, and I will be very open to flipping bearish if we see the XLF flip under 52. So that's kind of like my bull bear line here, and that's also supported by where the POC is, 52.33. So I'm giving a little bit more rope under 52. If you go under 52, I can see financials being part of that pullback, unfortunately, for the SPY. If it sustains above, then it actually might be some of the strength and stability you could look into, even if we see a pullback on the general market, or more importantly on tech, which is seeming like what we're seeing from the overnight session, or I should say from the weekend session. Consumer discretionary, again, this is like your Tesla, Amazon. You guys know how I feel about those names, so take that with what you will with the XLY. And I don't really talk much about XLC. To be honest with you, I don't really follow it too frequently or too closely with comm services. I don't have much of an opinion. It's okay. It doesn't look bullish. It doesn't look bearish. It just kind of looks like it's going to ride the trend of the rest of the general market, in my opinion. But comm services is not something I personally pay much attention to. That's just me. You do you. Anyway, let's pop back to the market here. Looks like we got a nice little break here. Now we're testing the 200 MA. We pushed up after that PMI data at 9:45. Now, again, we do have data again at 10. We broke through our 2 LOIs here. Now we're testing that 200 MA on the 1 minute here, which, let's see, has not been tested at all, even in the pre-market session. So I would anticipate a reaction to the downside here. Let's see if our IV has cooled at all. IV is still pretty elevated. It was 24.5-ish when I looked last. It's still 23. So the market's still anticipating a harsher move either which way here with higher IV. Now, if we do overshoot this, I would look for a short-term pop to 639.85. But depending on how that news rolls out at 10 o'clock, more than likely anticipating a continued push to the downside here. This is the kind of move I don't like as a bull. If we were bearish or we open bearish, I don't love this move as a bull because you're pushing up here where the 200 MA is, where we had some level of consolidation here. If you really want to be a bull today, you need to break over this LOI here, this 639.85. I mean, even if you look at the pre-market session here, and you can see it in real time, this area served as a period of consolidation here where we tapped it once, twice, 3 times, 4 times before breaking to the downside. So this was a key area in the pre-market trading. Before getting a tumble fall to the downside, tumble fall, whatever, to the downside. So as a bull, I don't like this move until we break over this level and continue to the upside. As a bear, this is an area which I would personally look to short. I would also look to short here at 639.85, anticipating the rejection to the downside. Now, with that being said, again, considering it's not Monday, it's Tuesday, but it's the first trading day of the week, big gap down overnight. I don't want to rush anything, especially with higher IV. And volatility still pretty hot to the upside now. We got that VVIX update now over 100. So 106 tends to spell wide swings for volatility as well, with our VIX sustaining over an 18 VIX right now. Has been selling off since the open. VIX has been coming down, but as a whole, you're not out of the woods here. You have your UVXY sitting under 200 MA on the 1 minute as well. So a little bit of an obvious correlation here with where SPY is sitting. So if you were looking to take a short, now would be the time, in my opinion. And again, I would only look to long if we broke 639.85 with some gusto. That is what I would keep my eyes on into this kind of open. I kind of want to short it, but I'm probably not going to have a fun time doing that because it's probably not going to move the way I want to. Plus, we have news in 5 minutes. So I'd rather miss this bus at all. And now that I'm saying this, IV has dropped another like 0.5%. So that's actually a quick drop in the last like 2 minutes or so since I last looked. So IV could be decaying here. You're going to want to keep a tight eye on that if you are buying to open contracts in today's trading session. Let's flip over to our Mag 7 names real quick. NVIDIA getting a little bit of a push up here. Looking like it's rejecting that. This is something I want to say for you guys that are trading NVIDIA specifically. These strike levels, keep an eye on them. I know it sounds silly. You may not necessarily have an area of support resistance there, but especially a name that is so heavily traded and has so much. Let's look at the OI on these 172.5s. Where's my OI? Open interest. So you've got 19,000 and 8,000. So you've got almost 30,000 OI between both put and call side on the 172.5 chain for this week on NVIDIA. That's going to cause big swings either which way. Because obviously as we break, or maybe not obviously if you don't know, as we break these strike levels, market makers have to hedge. It's called delta hedging. They have to hedge for these options potentially expiring in the money. So they're going to de-hedge some certain positions and hedge other positions. So as we push around these strike prices, you should see sharper reactions, especially with this much OI on the chain. Now, even look at the 170s here. You almost got 50K between the two sides of the chain here. So that's what we saw. Where's 170? 170 here on Nvidia and had a sharp move up, mostly probably, and I shouldn't say mostly, let me say partially in due to the help of hedging, because it is a shorter week. We're already on Tuesday, and those are a lot of contracts looking to expire. So consequently, market makers are going to look to hedge probably a little bit more aggressively than usual, especially with how the market's sitting right now, where volatility is sitting. I would anticipate hedging behaviors by market makers to remain delta neutral, to be a little bit more aggressive than they otherwise may be. So you're going to want to watch those strike prices specifically on Nvidia. And obviously, that same theory can boil over to all your Mag 7 names. Every time you pass a strike, you should get some level of reaction, especially on a shortened week, and especially after a sharp move down, where even at the open, we got a hedge again. So you should see a lot of movement today, which makes a lot of sense with where the VIX is sitting. Okay, there's 2 minutes until 10 o'clock. If this PMI data comes out and we're still sub the 639.85, I'll probably look to grab some 640 puts for tomorrow on the SPY, or 639 puts. Be a little bit defensive because I'll be at the money, and I'll buy tomorrow's contracts to kind of de-risk some of the IV risks that we could see off of the market. I normally, like I said, I would have taken a short here. It's just I would rather be safe than sorry. If 10 o'clock rolls around and we get a death candle and I miss it, it is what it is. I'm not going to cry about it. I'll just be happy that I was still right regardless. Can't be mad when you're right. Even if you didn't make money, you know you made the right decision. It's all that matters. Let's see. Where is UVXY in the daily? All right, so what I'd look for today. Watch your high on VIX to break if we do see a downside, a low a day sweep, and getting over that 2030 level. Conversely, if you want to equate that on your UVXY, I would look to see 1375 and 14. So really like your 13.5s and your 14s. Looking at those levels on the day, high a day is 1328. So similar to the VIX, that's probably a similar measured move there. We're looking at like 1375. If we get a break over that level, and we get a break over the 2030 on the VIX, plus we sweep the low a day, then we're going to sell off for a good majority of the day until that like Trump announcement. So there's your guardrails for the day. We'll see what happens here in a minute or two. But especially after this move here, if we stay sub 639.85, we will sweep the low a day. And volatility, if it breaks those two parameters, we're more than likely going to continue a trend to the downside. So we'll see here. All right, 10 o'clock coming up to tap that LOI. Let's see what happens, folks. I'm going to get ready on those puts for tomorrow. I'll pull them up here on screen. I'll look at the 639s. Okay, I'll put them up at the top here so you guys can see. So I'm not going to rush this because, like I said, if this breaks and holds, then we actually can flip. We can flip bullish on the day. Can. We're not, but we can flip bullish on the day. Now, if we wick and leave it, like I said, I'm okay with being late to this party. That's going to be my sign to open a short. So I'll give this a few minutes here, because if this does break with some volume, because it's a good candle here, you got some good volume. If this breaks with volume and continues, I'm going to be on the wrong side of the trade if I open up a short here. If it floats up here for 2, 3, 4 minutes, then I'm going to want to open that short. Testing it again. So what I want to look for here as a bear is I want to see another wick left behind. So this candle closing underneath 639.85. On the 1 minute, if that happens, more than likely the next candle will be red. Let me actually get this typed up just in case. So even if I'm on a delay, you guys at least know that I'm looking at the 639 puts for tomorrow. And you guys know when I'm going to pull the trigger here. Okay, we closed under again. So we wicked above, we closed under. So this is more than likely going to continue to the downside. Good managed risk here. I'm long at 210. So I'm long the 639 puts at 210. basically my stop here is high a day. If we break high a day, I'm out. Now you did see, I'm looking at my other screen here, the dollar did drop on that news, which obviously could have caused part of the spike on the SPY. So we'll see how the dollar reacts here in the interim. But I am long the 639 puts for tomorrow at 210. Pretty tight risk here, like I said. Now, if volatility plays ball and we pull back to the downside here, as long as we stay sub this level, there's a very high probability we're going to sweep the lows. And as long as volatility also participates, meaning we break over 2030 and we get over like 1375-ish on the VIX, we're going to trend to the downside very aggressively. Believe it or not. We're going to probably zoom in here. Zoom in, enhance, enhance, enhance. This is very anticlimactic. All right, here we go. 634.21 is my next price target. I actually think you have a strong chance. So getting down to these lows here. So the low of this candle, 633.81. The low of this candle, 632.95. My stretch target would be the 50 MA would be like super stretch. That's all the way at 630.65. But 631.54. We're talking another 7-8 points on the day. If volatility plays ball, that's the key part. Volatility has to be over those levels that I stated. 2030 on the VIX, 1375-ish on UVXY, because that will show that short term, your spot VIX is higher. And I like using UVXY as like my mixed short-term VIX with a little bit of longer term in there. And also, obviously, UVXY, since it's an ETF, has options. So you're going to push some of that options hedging as well, just like you would with all your other names we just talked about. You would see a reaction here as well, which could be greater or smaller than how the VIX moves. So that'll be interesting to see. We're testing the AEMA here, currently defending it with a green SAR here, breaking the green SAR. Watch your 200 MA as your trigger for downside. My first take profit point is going to be this range here, 638.04 to 637.58. If momentum is there, I'll wait till 637.07 to take profit. Guys, that's going to be a $2 fall from this point. So that's going to put me in the money by $2. So I'd be at full intrinsic value at that point. That'd be pretty rad. Delta on these is 47 cents, so roughly about a 50% gain I would see at my first take profit point if we get all the way down to 637.07. But like I said, I'm anticipating, as long as we don't make a new high a day, that's why this is a really good risk reward trade here, that we sweep the lows. Believe it or not. Toby says, the good old 2030 VIX. Yes, sir. The good old 2030 VIX. All right, we're up a little bit on these puts, but not rushing anything here. Let's let it do its thing. That's why I said you want to look at tomorrow's contracts, because if this does go against me, which is possible, like I said, I'm risking the high day here. This could go against me. I want to have a little more buffer. The IV on these contracts is sequentially much lower. It's 16%, so there's a very low chance of me getting some IV decay here. I mean, I will get some if it just kind of chops sideways, but my chance of getting IV decayed is very considerably lower. All right, up around 240 here per contract. So roughly 14-15% gain so far. Like I said, you're going to want to watch the 200 MA as a trigger. I might take some off, like I say in our community, depending how we react on the trigger. That's typically my first point to take profit, depending how it reacts. A trigger point, if you ever hear me say trigger, is one of two things. It's typically an area of support or resistance, so you will get some level of a bounce. In this case, bulls will try to step in, which you're kind of seeing a little early here. But when that level breaks, there tends to be a quick move to the downside or the upside, depending on where trigger is. So in this case, first defense here, kind of a double bottom, tweezer bottom on these kinds of wicks left behind for now. We'll see if that substantiates or if that holds in the next few minutes here. Because again, we're only on the 1 minute. I look at the 1 minute on this program quite a bit. For a lot of people, it's overwhelming. For me, I want to get as much information as possible and kind of like distill it down to longer term time frames. And that's why you'll see me flip between the 5, the 3, the 2. But I like the 1 minute because it's giving me as much information as quickly as possible without going like crack addict mode and doing the 5 second or the 1 second. The only time you may ever see me use a 5-second chart is if we're in the last 10 minutes of the day and I'm trading a 0 day, which isn't too frequent, but it does happen. All right, how's our VIX? So your trigger on the VIX, you could use 1830 here. You also have 1808. So you had a cluster of support here, 1775, 1808, 1830. You're in the middle of that right now, which is interesting because you're lining up with where SPY's trigger is to the downside. So we're seeing these levels line up. That makes sense. You're seeing a level of potential resistance here on the VIX, and you're seeing a level of support on the SPY. Now, when one breaks, they both will go together, theoretically. UVXY trying to push up here. You're going to watch 1298 on UVXY. Watch NVIDIA 170. Pretty easy. We just talked about that earlier. 200 MA is just north of that, and you saw a nice little wick there off the 200 MA. That's, again, north of the 170. So if you see that 170 break, this could be enough juice here to fire the SPY to the downside, get you a new low a day on NVIDIA as well. Meta is actually acting pretty defensively thus far, so a little surprising. We'll see if that can sustain in the near term here. Microsoft as well, a little, it's shaky to me right now, but overall in the day, acting defensive after you broke that 500. Quick bid back up. We'll see if we close under 500 today. That'll be very interesting to me. Google just kind of chopping out the gate here, nothing too crazy there. Apple looking like it needs a little bit of a cool down as well. Tesla hugging that 331.89 LOI. Should get some level of quick rejection here in the near term. And Amazon getting pinched. Higher lows, lower highs. You're going to get a breakout here one way or the other very, very, very soon. We'll keep an eye on SPY for now because that's obviously the open position I have. Now, obviously, you do whatever's right for you. Like I said, right now you got about 10, 15% gain on these puts. You know, you do whatever you want to do. I'm waiting to see if this trigger breaks. We tap it again and we don't get any follow through. I'll probably take a trim off here just to de-risk because then there could be a possibility we come up for like a double top and then I can get back in again. So just to take some risk off where I could still realize a gain and then be a little bit more defensive. So we'll see here. NVIDIA is at 170. You look at the reaction on the market. We actually pushed down on that quick little tap. Ooh, that's a red bar on NVIDIA. This is going to be gnarly. So this 5-minute on NVIDIA, if this 170 cracks, you've got MACD flipping over, bearish momentum with a green SAR here. If 170 cracks, we're going to pull lower on NVIDIA today. For a multitude of reasons. So you're going to want to, bulls need to defend. If you want to be a bull on NVIDIA, you take the stab here with a tight stop loss. Tight stop loss. We're breaking the trigger here on SPY. Testing it, along with NVIDIA testing at 170. I'll shave a few off just to be a little defensive here. 14% gain. Better safe than sorry. I'll do that and I'll put a stop loss on just in case we reverse out of here. That way I'm rather safe than sorry. Because now, as I like to tell you guys, I'd rather realize a gain, and B, I'd rather be defensive because in this scenario, like I said, there is a chance that the bulls defend the trigger point. We push up here and we get kind of like a double top look. And then, like I said, it gives me position to reassess or reposition as a whole. I still think we're going to push lower here, but you're at a point where bulls have to step in on NVIDIA or it's going to dive lower. So I'd rather be safe than sorry. I've got a stop loss on now. I realized about a 14% gain on those puts. I still have a position, and I have a stop loss. So either way, it's a win-win-win all around. I'm not going to have a loss. And if the bulls do reverse it here, which are trying to put in a little bit of defense here, I can at least reposition, and I actually might get cheaper contracts. So it's not all bad. But you saw 1, 2, 3, 4, 5, basically 5 full minutes here of defense by the bulls, trying to protect this 200 MA, trying to protect this trigger level, as they're also trying to protect 170 on NVIDIA. A lot of moving pieces right now. VIX is at the 1808 support resistance level as well. So a lot going on. Let me be abundantly clear. Setting that stop loss isn't me feeling like it is a lower probability trade. It's me saying there is a chance this pushes higher. If and when it pushes higher, I think I can get my contracts the same position, even cheaper than I have it right now. Plus, I get to realize a gain. So it's really a win-win. What I'm looking for here again is if we push higher, I would look for an entry. What's the low day on these? Low day is 193. So actually with a 210 film, I'm pretty good. I would look for an entry around $2 if I get stopped. So we'll see. Oh, I might get stopped. We'll see. We will see. Nvidia bulls are really trying here. They're trying. Will they get it? Oh, it's shaky. It's shaky. VIX rejected the 1808 so far. Volatility, UVXY also rejected. VVIX is cooling a little bit. You do have this red star here as well. So again, if we break that red star, it could lead some credence to a continued upside move here. So it's good that I have that stop loss in place, which might get triggered here in a second. Oh, it's close. It's a close one. This just feels sketchy. Like looking at it, this just feels like it's going to get a big old red candle. Like it does not seem... Wow, IWM's actually... I haven't looked at IWM for a while. Pretty decent show of strength, all things considered. Woof. All right. Back down. Back down to the trigger. Break the trigger on this. Let's go. Crack it. Just like that. Went all the way to my entry and back down to where I took profit. So if you missed it, here's your 15, 14, whatever percentage again, right around here at this, this 200 MA. Solid risk to reward here. Nvidia is so shaky. The bulls have to save it in the next 5 minutes. If they don't, this is going to have a bad day. If the bulls don't save it and we break the lows on the daily, that opens up the door to like 157.75. 158 even. Or not even. A little bit happier, 158. That's near term. Iffy. As you can see, there's a reason why I also stayed away from the 0 days here. Because if I got a 0 day, now granted, I got in up here, so I probably would have been able to trim out like 20-30% here pretty safely. But I'd be kind of sweating bullets here, getting chopped up a bit. Actually, let's see if those 0 day contracts, what the IV on those is. All right, so they're 20 now. So we've lost, and that's a big jump, just so you guys understand. 4-5% on IV, especially on a 0 day, is a big drop. Now, what I will say, if we do see a hard drop here, you're going to see this number get all the way probably to 30. That's going to get hot. You're at the money IV on 0 day contracts. Here we go. We're getting the break. NVIDIA didn't even break 170 yet, and SPY's starting to break to the downside. New low out of this low price range here. Again, I'm targeting this general area here, and ideally 637.07. Very, very short term. So like before I close out the show, essentially. That's where I'm looking for these three areas. Here, here, and here. And then again, I will remind you, just so you guys understand my trade plan here, if volatility plays ball, which VIX is starting to, we broke over 1808. If volatility plays ball, you will break low a day. You will see a 7-point drop from high a day. You can rewind this and see if I'm right. Again, that's only if volatility plays vol. That's the VIX being over 2030. That's UVXY being over 1375. And really, you should see the VVIX go up on that as well. I'd say VVIX north of 110. So with those parameters, you will see the SPY fall $7 from high a day, conservatively, today. There's me fear-mongering. So that gives you 630, what's that, 633 roughly? If you're taking from the high a day, if I have 639 contracts, that's $6 intrinsic value alone, which would mean I would have at least a 200% gain on those puts just on intrinsic value alone. So that's why I say when I look for, especially in this environment, really solid risk to reward trades, that's the kind of like quick math I'm thinking in my head before I open a trade of like, how much could this be worth? How much could I make on this trade if my theory is correct? And what am I risking? In this case, like I said, I was risking high a day. And in this case, I'm already green on it and I got a stop loss on. There's no loss here. So the risk is good. Bulls are not wanting to let NVIDIA drop 170. We're still in that 5-minute window. You got 2 minutes left here on that 5-minute window that I gave you for NVIDIA. So they could defend it. Did just break the red SAR and SPY. So for a continued downside move here on the SPY, I think it's looking like the bulls, unless we get just a red candle here out of the blue, it's looking like the bulls are going to defend 170. So I'm actually going to anticipate getting stopped out of my SPY contracts short term. And I'm going to anticipate we're going to float just shy under this LOI before continuing to the downside. I'm going to be happy if I'm wrong, but just trying to read both sides of the coin here, I do anticipate us to float a little higher here, just under that LOI, at least short term here. It's going to let your MACD cool off. It's going to let you resolve this this little downtrend, get a little pop here, a little bearish cool down before getting like a full leg sweep of the market to the downside. Bullish momentum, kind of right now, 54 on the RSI, relatively neutral, but leaning more bullish. But again, that depends. If NVIDIA can hold it together, like I said, for the next 5 minutes, you got 1 minute left here on the 5-minute candle. It kind of changes things a bit. That's why I'm saying I'm anticipating decent chance of getting stopped out of my position here on the SPY. Just flipping around real quick to everything else. Microsoft somehow is pushing to a new high a day. Google at the top of its very tiny range. Apple's also somehow holding the highs. Tesla a little bit north of the LOI, but nothing too crazy there. Amazon making lower high, lower high, lower high, lower high, higher low, higher low, question mark. Again, you're going to get a break here. This is probably just going to follow the market. So if we get a bull move or a bear move, Amazon's probably just going to follow whichever way the market kind of dictates it goes. Man, this is torture chamber right now. Go one way or the other. I don't care at this point. Either stop me out or give me the death candle. Let's go. Pick a direction. NVIDIA push higher, left behind a wick. So this is a period of liquidity. This is where a lot of liquid is in the market today, apparently on NVIDIA. Sub 171, north 170. This $1 range here, good amount of liquidity in the market, even justifiable by our volume profile on the side here. You see the most volume traded by price on the side here. It shows you where the most shares were traded today by price. Volume down here is by time. So by price, the most shares are traded in this 170, 171 range today on NVIDIA. Oh, am I going to get stopped? It's close. This is technically a lower high for now. Let's see if it sticks with a lower high. Because this would be lower lows, lower high, which is going to lean more bearishly. There is nothing more bearish or bullish than a failed... Okay, how do I say this? There's nothing more bullish than a failed bear move, and there's nothing more bearish than a failed bull move. When one of the other sides of the coin, in this case like a bull or a bear, gets the ability to push things their way and they just fumble it, the other side takes it and runs with it. Just like you would with a football game or a soccer game or whatever kind of game, when the other player doesn't show enough teeth or whatever and you're being more aggressive, the other side resolves. So in this case, this is the opportunity, again, for the bulls to push it here. And my stop got triggered. It's the opportunity for the bulls to push it here. And if they don't push it, it's going to fire down. So I'm currently out of my position, but I'm going to look to reposition. So we'll see here if we sweep. Again, in theory, we should get just shy of 640, I think. So we'll see here. I may have gotten wicked out, which would suck if I did. I would give this another 5 minutes or so to see. we're still making lower highs here. So this high on this candle is 639.52. So if we substantiate under that level, it's showing a lot of weakness by the bulls, even with MACD theoretically flipping in their favor, even with being above all your EMAs and MAs, even with a, for all things considered, a more bullish momentum here on RSI. If we don't see a push here, that's going to be an opportunity for the bears. Back to my 210 entry where I got stopped. Ooh, it's iffy. Iffy. These wicks up here on NVIDIA are indicating that people are selling, or there's no one's interest in the price up here, right? It's driving it lower. We open the candle, we push all the way up, we close lower. Again, close lower, close lower. So we're showing that people aren't interested in NVIDIA shares up at that price, at least intraday, in that short microcosm of time there. I'm going to be patient on this. I could miss the move. No, NVIDIA's going to launch to the downside. All right, I'm going to get back in my SPY puts. All right, I'm back in my SPY puts with a 225 average. And I'm actually going to put my money where my mouth is. I'm looking at the 167.5 puts on NVIDIA. I'm going to go a little bit more defensive, actually. All right, I'm long the 170 puts on NVIDIA at 275. Sorry, I'm typing this out right now. Okay. So far, green on that SPY trade. Again, my re-entry, so I actually bought back more expensive at 225, and sometimes that's how the cookie crumbles. But so far, so good. And let me get that NVIDIA contract up here for you guys to see. Those are now trading at 290. Broke the trigger on SPY. We should see that drive down that I've been waiting for here now. NVIDIA has now broken 170, so we should see a low a day push on NVIDIA here as well. This is like last chance for bulls, but this 5-minute looks gnarly, like it's going to sweep lower, so I'm willing to be patient on the NVIDIA play. Obviously, these two are going to move together a bit, but we're seeing volatility start to play ball as well. This 1830 level breaks, you got nothing but air here on the VIX up to 2030. Well, you're going to want to watch open, so 1929, but you got nothing but air here on the VIX. So volatility is ready to mark up. UVXY getting north of 1298 is ready to mark up again around 75 cents or so. So it looks like volatility is willing to play ball with me here. So it's looking like we're going to see a bear sweep. Believe it or not, I know we gapped down, I know. But don't fear the Reaper. Alright, let me take a few off here on SPY just to de-risk some. It's going to be a 20% gain. Those NVIDIA contracts now are at 291, so not as much of a gain percentage-wise comparatively to the SPY puts. But you gotta keep in mind those NVIDIA puts are also for the end of the week, and they're also at the money, not in the money. Well, I mean, they're at the money, in the money. It's the same difference. Oh man, bulls, give it a break. Just die already. Die already. Yeah, if this low a day breaks on NVIDIA, these are gonna bank. These contracts are gonna make a nice chunk of change. And obviously help push SPY even lower. Let's look at our other Mag 7 names here. Meta has just been grinding the upside, so this is only going to perpetuate more of a downfall in SPY in general if this gets some level of a pullback from some NVIDIA fear. Same thing with Microsoft, somehow grinding up, even though market conditions in general are leaning more bearishly. Google got a little bit of a pop there, but seeming like it's going to give it right back pretty quickly. Amazon is still doing lower highs here and higher lows still. Tesla, just waiting for that 330 close. Close under 330. You're getting there. You are getting there. Yeah. Watch volume here on NVIDIA under 170 and at the low a day. This is going to be you're going to have a violent push to the downside if volume steps in. Now, to understand delta hedging, it doesn't necessarily happen immediately. Like, oh, we just passed 170, you're going to buy back and forth, back and forth. No, once there is a higher probability of those contracts going in the money or out the money is when you see hedging occur. So it tends to be, you know, $1 or $2 or whatever move past it. In this case, like earlier today, let's look at the 1 minute here. When we broke 170, you could probably argue somewhere around here or like at 171. Some level of delta hedging could have happened there to push it to the upside. Same thing here. You're not going to see market makers delta hedge when it's at 170 to push some contracts in or out of the money. It needs to push, you know, pretty definitively one way or the other here. Okay, nice little SPY candle here. Ding dong. Hello. NVIDIA really didn't catch any of that. I mean, got a little bit of it. Who is the driver of that? Meta got a push. Little baby push on Microsoft. I'm not seeing like a big name got a big push off that. Like a Mag 7 name. I mean, they all kind of pushed to the upside there, but nothing too crazy. Interesting. So I'll see if the high of this range breaks again. If it does, then I'll close out my SPY puts, which I've already realized a 20% gain on some. So at this point, if I close them out again north or around that 210 area, I'll still realize a gain on those, so it won't be the end of the world. Because again, there's still a probability that we get up here and reject. So I'm going to wait and see. Unless we got news that I missed. And again, the NVIDIA puts I'm not as worried about. There's more time on them. They're at the money. It'll be okay. Nice volume there on SPY. I don't see any news coming through. Unless someone can tell me something I might have missed. Let me know in the chat. I don't see anything causing a pop in the overall market. Yeah, I don't see anything. That means we wait. We wait. Patient bear. If you're nervous or in a smaller account or whatever, the SPY puts are roughly around entry. I still think they're going to perform, but if you want to hop out, you're a little scared, you can hop out. No shame in your game. Don't forget, between now and 2 o'clock is probably your window of opportunity. As a reminder, Trump is going to speak at 2 o'clock today, so anything can happen with that. You want to be mindful of that in case there is something that can affect your trading that he says. Who knows what he will say? I do not know. But anything can happen that could cause some level of a market fluctuation with him speaking, obviously. All right, I've been talking for quite some time here. I think I'm going to wrap it up here momentarily. I'm going to give you guys my whole game plan here. I already gave you my game plan on SPY. You already know my risk here, essentially. Probably going to ride these puts now. You know, those take profit points. Here, 638.04. Here, 637.58. And then POC moved up here, but somewhere around here, 607.07 area. Then riding the rest basically for a low day break and dropping down to like 633 today. If volatility plays ball, again, those reminders, you want to keep an eye on volatility. It's in this little kind of support cluster zone here, breaking above 1830, which you can see here we rejected at 1826. So you want to see north of 1830 if you're a bear today, ideally, to see volatility potentially push into expansion all the way to 2030. And you want to see UVXY north of this 1298 to push into expansion north of like 1375. If those two things come true, along with probably a 110 VVIX, you're more than likely going to sweep not only the low a day, but you're more than likely going to get about a 7-point drop on the SPY from high a day, or roughly around 636 before the end of the day. Additional qualifiers you may want to use in your trading today is Nvidia being south of 170. Now, you guys know I'm already short Nvidia, 170 puts for this week. Those, again, filled at 275. I haven't realized profit, loss, anything on those yet. If you want to know what happens with that, you can check out the Discord. All my trades are logged there. And if you haven't already, pop over to my X account. I upload all of my trading results on that X account so you guys can see how I did. I actually just uploaded the month of August. That sounds better. Trading results on there. I alerted 73 trades, 63 of which were gains or wins, an 87% success rate, and an average return of 48%. That's even including all the losses averaged into the average return. So it's not just adding up average returns and dividing. That's including all losses in with that average return. Every trade I alert has had an average return of 48%, including losses. You can see my top 20 trades there as well. Best trade last month was with a 468% gain on SPY. Pretty cool. And I had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 100 plus trades last month, which is pretty good for me. I like to be a little bit more conservative, but when the opportunity arises, hey, we strike. And last month was a good month for me. I hope it was a good month for you guys as well. We're going to do another stream this week. I don't know when just yet. As you guys know, I'm doing a lot in the background right now, so I try to let you guys know as soon as possible. But I will do another stream this week, at least one, maybe two. So I will let you guys know as soon as I know. If you will follow me over on my X account, you'll be the first to know there. Where, when and where. Well, where is here, you're watching me, but when I'm streaming. That way you guys don't miss any shows. With that being said, some say you need an angle to trade. Nope. Some say you need an edge to trade. Well, I like to look at things from a different angle, and that's always what you guys will get right here on the Atomcash angle. Have a great day, guys. Make smart decisions. And remember, precision beats prediction every damn time. I'll see you later this week.
The time has passed, and that's a wrap.